Millions of Americans are feeling the effects of high inflation at the fuel pump and the grocery store. And now it's starting to push more people, including retirees, back into the labor force. Inflation can be a major financial shock, and today our financial contributor, Brian Mirau with Mirau Capital Management, wants to help you prepare for other financial shocks you might encounter in retirement. Brian, thank you for coming on today. You know, when prices start to climb, consumers make adjustments to spending. You know, it's one thing to switch to generic brands or cut back on eating out, but it's another thing to be retired and have to go back to work because of rising prices. Go ahead, Brian.
Well, in March, the share of people over the age of 55 who are working or looking for a job was 38.9%, Mark. More than 480,000 people over the age of 55 entered the labor force during the past 6 months.
So what is your reaction to those numbers?
Well, one of the main reasons, Mark, for these numbers is the fact that everything is costing more with the inflation numbers that we're seeing today. You know, retirees on a fixed retirement income are finding it harder to handle the daily cost of living expenses. You know, and one choice they have is to go back to work, to help bridge that gap between income and expenses.
So let's talk about what goes into a retirement income strategy that can help us have enough income so we don't have to go back to work to pay the bills.
Well, Mark, when planning for a retirement income strategy, there are 4 major areas that you must be efficient against. The first thing is taxes, then inflation. You don't want to pay unnecessary fees and expenses in your retirement accounts, and most of all, market what we call risk and volatility. Now, if you're not efficient against these 4 areas, you can find yourself dripping nickels all over the place, thus causing your retirement nest egg to run out before you do.
So according to a recent Society of Actuaries survey, about half of pre-retirees surveyed report experiencing some type of financial shock, as well as more than 4 in 10 retirees and 1 in 5 pre-retirees report financial shocks have reduced their assets by 25% or more and reduced their spending by 10% or more. So what are some of the possible financial concerns that we need to prepare for before we retire?
Well, Mark, as I mentioned before, not only do we have to be efficient against taxes, inflation, fees, and market risk, we also have the issue of health care cost. You know, because the effects of inflation, a HealthView report stated that a 50-year-old couple in 2019 planning on retiring at age 65, they can expect to spend about $405,000 on health care in retirement. Now, because we're living longer today, we have to face the fact that as we age, our bodies break down, and some of us, we're going to need some help. And this gets into our long-term care planning. You know, there's different ways to plan for this, and our chances of having to deal with this is literally 1 out of 2. And this is something that we help our clients with each and every day. You know, many folks think that the only solution is to buy long-term care insurance, which can be expensive, and it's only one possible solution, but there are many other ways to plan for this event that you have in life.
Brian, how can we help make sure we're prepared for those financial shortfalls in retirement?
Well, the most important thing you can do is visit with a qualified financial professional that can help you explore the your own individual situation and help you think through your individual possible solutions to help you avoid possible future financial landmines that we call it, and keep that in front of us as we approach the retirement chapter of life. You know, the reality is inflation never stops. You know, it might ramp up or it could slow down, but it never goes away. You know, if you want to maintain your current standard of living in retirement, you must understand what rising inflation can do to your retirement and how you can help protect your savings. So today, you know, we're offering a no-cost, no-obligation retirement income analysis to help you figure out how much you're going to need to save and achieve in retirement. You know, and achieve the retirement dream that you've been dreaming about. You know, we'll help you uncover the risks that pose a threat to your retirement, including inflation, stock market volatility, potential tax increases, and skyrocketing healthcare costs. You know, you want to learn about the options for generating income in retirement. You know, you might have a good handle on your budget today, today, but the cost of everything doubles about every 20 years. And that means that 20 years you're going to be spending about twice as much, and you're going to have in order to have the same lifestyle that you're currently having. And now as your savings shrinks over your retirement, your cost of living is going to continue to go up. But by putting a plan in place can help you make sure that your savings will last no matter what happens with inflation, taxes, market volatility, and so forth. Now there's a no cost and there's no obligation, but this is just for our viewers of today's show. Now you can call 1-888-668-9327 and ask for your retirement income analysis, and you can also visit us online at www.miraucapital.com/TV, and don't miss out on your no cost, no obligation retirement income analysis. Again, that number is 888-668-9327.
Brian Mirau, thank you for coming on this afternoon. We'll see you next month.
Mark, thank you so much.